Welcome to the Wednesday edition of Tech Stocks Daily, where we've got a tech-tastic lineup that'll keep your brain buzzing and your portfolio popping. First up, Apple is making waves by teaming up with Alibaba, aiming to dive deeper into AI and take on the Chinese market. Plus, there's a hilarious twist with their Maps mishap. Then we've got Doximity, riding high with growth projections that'll make stock analysts swoon. And buckle up for AppLovin's jaw-dropping earnings performance that's got investors tapping their screens in excitement. Finally, we wrap it up with Synopsys, who's grabbing attention with their strategic plays in semiconductor design. So stick around, because today's roundup will be one you won't want to miss. Ladies and gentlemen, our tech spirits have soared once again thanks to juicy revelations from the tech giant whose logo kind of reminds you of a fruity snack. It's Apple. Ripening up today's headlines, Apple has been buzzing more than an iPhone caught in meditation mode, and here's why. First up, Apple's options activity has been shaking and stirring with increased vigor. Who needs a horoscope when you've got stock market omens? Some serious heavy hitters, known affectionately as whales in the financial oceans, have been throwing hefty dollars into Apple options. With 128 unusual options activities spotlighted by Benzinga's tracker, it's like Black Friday for investors. A fascinating 48% are betting bullish, while 44% nod towards a bearish turn. But with call totals around $6.8 million, the bulls are having a cabaret. Switching gears, Apple teamed up with Alibaba, dipping its tech toes into the AI waters specifically for Chinese users. It's a plot twist fit for the finale of a bilingual crime thriller. Bafa Securities' Wamsi Mohan sees this as a strategic game-changer. The Apple-Alibaba alliance could finally muscle in on Huawei and Xiaomi's AI territory. Tim Cook revealed his global AI desires, sort of like a tech dragon lifting off, but these smart features still wait for China's tick of approval. Intriguingly enough, while the iPhone brags about its stats from multiple regions like a jet-setting influencer, the eagerly anticipated rollout for China remains relatively down under. In brainy banter, Apple doesn't just find a wingman, it establishes a new hype cycle. With analyst Samik Chatterjee endorsing this genius alignment post-Trump Paris Agreement, the boom-making potential is like finding out your iPhone has a hidden portal to another dimension. The impact on Apple's market shares might be tidal, wooing winks from investors everywhere. And hold your applesauce, there's more. In a somewhat bizarre cartographical update, Apple accidentally caused a nautical snigger by renaming the Gulf of Mexico to Gulf of America in its maps. Magnified fits of laughter as sharp-eyed users realize zooming in reinstates the original name. Plays nicely into both political drama and satirical comedy when Mexican President Claudia Sheinbaum, maybe as a joke, proposed changing United States to Mexican America. A digital shell game making anything Spielberg would zap onto his storyboards. With tantalizing market maneuvers, ambitious AI collaborations, and water bodies mysteriously name-swapped, Apple's daily dose of excitement seems to have something for everyone. Keep spirited, and stay tuned as Apple weaves these tales, creating its path with innovations and digital bravado, because with Apple, who needs a dull moment? Hey tech enthusiasts, today we're diving into why Doximity is making headlines and winning hearts in the tech stock world. Spoiler alert, it's all about strong growth potential and market momentum. First up, let's talk growth, because who doesn't love a company that's on the up and up? Doximity is generating buzz as an incredible growth stock, and it's not just hearsay. The Zacks Growth Style Score has given Doximity an excellent rating thanks to its high earnings growth forecasts and solid cash flow. Imagine your piggy bank swelling at a faster than average rate. That's Doximity's EPS outlook, growing by a whopping 32.6% this year, compared to the industry average of 11.5%. Add to that a stellar cash flow growth rate of 23.5%, outstripping industry peers, and you've got a recipe for a growth investor's dream. But wait, there's more. Doximity is also shining brightly as a frontrunner with bullish earnings estimates. Analysts have been on a roll, raising their forecasts and chanting Doximity's name like it's the latest viral sensation. This enthusiastic choir of analyst upgrades has propelled Doximity's Zacks rank to a number 1. And let's face it, when the experts start piling on the praise, it's hard not to take notice. With the company expecting to earn $1.26 per share for the full year, marking a near 32.63% increase from last year, it seems Doximity's party has just begun. Moving over to the momentum side of the equation, Doximity isn't just resting on its growth laurels. The company is experiencing a powerful momentum surge, showcasing a thrilling 34.06% share price increase over the past week alone, far outstripping the industry's average. Over the past year, its share price has skyrocketed by 158.24%, leaving the S&P 500's 22.28% growth feeling a little, well, sluggish. It's not just numbers, though. Doximity's continued upward revision trend for earnings estimates strengthens its foothold as a market darling. The company has seen 7 earnings estimates move higher in recent months, boosting the consensus estimate from $1.13 to $1.26. To round off this exciting roller coaster of upward trends, Doximity scores an A on the Zacks Momentum Style Scorecard. That's like getting an A+ on your report card without a single negative revision in sight. So if you're looking for a spicy addition to your portfolio, it's a great time to consider Doximity. This tech-driven medical social networking site isn't just another stock, it's a paragon of growth and momentum. Keep your eyes peeled on Doximity, as it just might keep riding that high-speed train to success. Ahoy tech enthusiasts! Today, we're diving into the sizzling world of app technology with breaking news from AppLovin, the star of today's tech stock performance. Strap in, because their latest earnings report has given investors something to cheer about. AppLovin, a mobile app technology company known for connecting apps to users through deeply integrated advertising solutions, has reported quite the knockout fourth quarter results. Imagine this, a revenue leap to a staggering $1.37 billion, outpacing analyst expectations like a gazelle outrunning a tortoise. Analysts predicted they'd quiet down to a cool $1.26 billion, but AppLovin decided to flex its numbers, vaulting 44% higher year over year. Talk about setting the bar high. Let's not overlook the spectacular EPS performance either. They came in at $1.73, leaving analysts' estimates of $1.25's coughing in the dust. Clearly, there's something brewing here, and it's not just a regular coffee. It's a triple-shot espresso kind of growth. Despite a 1% dip in apps revenue year over year, AppLovin's strategic focus on expanding their advertising prowess seems to be paying off. It's like they've been brewing a complex recipe for success, and the aroma is courting investors like a bee to honey. The company ended the quarter strongly with $741.4 million in cash reserves, showing us they're not just earning well, but they're also keeping a wary squirrel's eye on their acorns, or dollars, for a rainy day. They cited extraordinary team achievements in building an advertising model that ranks high worldwide, with impressive results for the gaming and direct-to-consumer sectors already apparent. AppLovin is on a mission to plant its technology into every company eager to see sizable returns. Guidance for the first quarter should catch your ear as well. AppLovin expects revenue between $1.36 billion and $1.39 billion, again beating the Wall Street projections of $1.32 billion. This isn't just optimistic forward-looking statements. It's anchoring confidence in a future revenue haul, with EBITDA expected to impressively range between $855 million and $885 million. Cha-ching. After these highlights, trading action responded as enthusiastically as a dog spotting a squirrel. AppLovin shares skyrocketed over 19.6% in after-hours trading, priced at 454.82 at last check. And yes, your dropping jaw is warranted as their stock was up more than 700% over a one-year period before these jubilant numbers even hit the floor. It's no wonder AppLovin is catching the eyes of growth investors like gold coins in a treasure chest. Ranked high with a Zacks growth score and zesty earnings estimates, they've positioned themselves not just as today's headline, but a beacon of potential tomorrow. If you're pondering about where to park your investment bus, considering this tech marvel might not be a bad idea. So grab your popcorn, because with such financial fireworks, AppLovin is undoubtedly a spectacle worth watching. All right, tech enthusiasts, let's dive into why Synopsys is making the headlines today. It's been quite a roller coaster for this provider of electronic design automation software, a crucial tool for designing and testing semiconductors. Synopsys has caught the eyes, not just of analysts, but also of some financial heavyweights, making it a hot topic on the tech ticker. First, let's talk options. Synopsys has piqued the interest of big money investors, or whales, who have been seen making unusually bearish moves on the stock. Over the past 3 months, trades revealed that 54% were bearish, mainly targeting a price range of $480 to $600. This is significant because options trading, while riskier, has higher profit potential, and observing these trades offers insights into market sentiment and possible future stock movements. Synopsys plays a fundamental role in the semiconductor industry, bridging the gap between traditional semiconductor companies moving towards systems company territory and vice versa. This movement boosts their client base amidst the digital transformation impacting several markets. But hang on, that's not the whole story. While investors are considering the bearish stance on options, others have zeroed in on Synopsys because of its recent performance and financial projections. The company's stock recently outperformed the broader Zacks S&P 500 index, showing growth of 7.9% in the past month versus the index's 4.3% rise. Despite a forecasted dip in quarterly earnings of around minus 21.1% year over year, the consensus anticipates a solid plus 12.9% increase in earnings for the current fiscal year, with expectations to climb even higher the following year. This paints a promising picture for long-term growth and future earnings potential. Revenue expectations are mixed, though, with a modest prediction for the current quarter but optimistic annual and future forecasts. Recent revenue even surpassed estimates, adding a positive twist to the story. Over the last 4 quarters, Synopsys has managed to beat EPS estimates 3 times, hinting at a potential reliability in defying expectations. However, there's a twist in how analysts perceive value. Synopsys is graded unfavorably on valuation metrics by Zacks, indicating it might be trading at a premium compared to its peers. This valuation aspect could be a crucial consideration for investors contemplating entry into this stock. Now, dear viewers, we want to know your thoughts. Are you bullish or bearish on Synopsys given the latest options activity? Does the potential for future earnings outweigh the current valuation concerns for you? Do you find these trends persuasive enough to dive into the tech pool or stay far, far away? Let's get the chat going. Drop your insights, predictions, or any spicy takes in the comments below. Your perspective might just start the next big debate in tech investing. All right, tech mavens, let's zero in on the star of today's stock party, AppLovin. After dissecting all the juicy financial tidbits, here's the scoop on whether I'd toss it into my shopping cart, hang on tight, or cash out like a dessert in the gym. That's hold, buy, or sell for the uninitiated. Based on today's upbeat report, I'd definitely consider AppLovin if you're already an investor. Why? Let's dive in. First off, they're not just meeting expectations, they're steamrolling them with a surreal revenue leap to $1.37 billion, way beyond the $1.26 billion forecast. A 44% hike year over year? That's not something you sweep under the rug. It's more like a tiger leaping into a tropical pool. Definitely noteworthy. Their EPS performance also gave analysts a surprise haircut, coming in at $1.73 against the lower $1.25 estimate. Even with a slight 1% dip in app revenue year over year, AppLovin's strategic pivot to bolster their advertising game is hitting a high note. They're not just dabbling in ads, they're on a high-speed roller coaster, shouting, "Look, ma, no hands," all the way to the bank. Furthermore, their cash reserves are bulging more than a chipmunk's cheeks readying for winter, with $741.4 million snugged away. They've kept an optimistic tone for the next quarter too, expecting revenue between $1.36 billion and $1.39 billion, beating Wall Street's consensus. This financial tapestry signals continued growth, newfound investor confidence, and most importantly, a robust plan moving forward. Could this enthusiasm suddenly dive? Always possible, but given their current buzz, significant earnings, and smart revenue projections, a buy or hold looks promising, particularly for those with an appetite for some frothy growth momentum in their portfolios. Remember, my tech-loving amigos, even though this sounds cinematically compelling, always do your due diligence. Peek under every financial rock, crunch your own numbers, and consult with your financial senseis. After all, while the tech market is like a high-octane movie, your investments deserve their fair share of thoughtful intermissions. What a whirlwind of tech action today, folks. From Apple's intriguing alliance with Alibaba and cheeky map mishaps to Doximity's impressive growth trajectory, AppLovin's stellar earnings performance, and Synopsys' strategic maneuvering in the semiconductor space, it's like Silicon Valley decided to throw a surprise party and everyone's invited. So if today's roundup tickled your tech fancy, don't forget to smash that like button, subscribe for more digital shenanigans, and share this video with your fellow tech enthusiasts. Swing by tomorrow for another exciting day in the world of technology news.